Here's the mindset shift that changed everything for me as a business owner. Every dollar I spend is either pre-tax or after-tax, and most people spend the wrong way. Today, I'm going to show you how I turn everyday expenses into tax-deductible business costs legally, the right way. And I'll walk you through a real-life routine I use to spot these opportunities in my own business. So if you're tired of giving away money to the IRS, this one is for you. So I want to start out by talking about this base concept. What is pre-tax versus after-tax spending? And the best way to describe this, if we look at pre-tax spending, this is money that's spent prior to those funds being taxed. And after-tax spending is obviously money that you spend after the money's been taxed. And the best way to look at this is, let's think of a W-2 employee. As a W-2 employee, you get your gross wages, but before you get that money sent to your bank account, your employer takes out all these different things, whether it's taxes, whether it is retirement contributions, everything else. But you get gross wages, all these taxes taken out, and then you get your take-home pay. And that is what is get put into your bank account. And then any spending that you do with that take-home pay is considered after-tax spending. Those funds have already been taxed, and those taxes have already been taken out. Now, let's flip the switch and look at it as a business owner. As a business owner, you have your sales or your revenue, and then you have all these expenses that offset that, which comes to a profit. And you're taxed on the profit of your business. So any spending that you do prior to that profit amount, any spending that you do for business-related items is considered pre-tax spending. That's spending that's done prior to it being taxed. And that's this concept of pre-tax versus after-tax spending. And the mindset shift is, how do we turn after-tax spending into pre-tax spending? Because let's go through a quick example. Let's just assume that easy numbers, you're in the 35% tax bracket. And if you make $100 after tax, it's going to be $65 that's put into your bank account. So you gross $100, taxes get taken out, you get a $65 check in your bank account, and then you spend on it. You're spending on that $65, not the $100, because taxes were already taken out. Now let's instead look at that and say that you spent $100 pre-tax. You just saved $35 in tax by doing that. And so if you can shift spending from after-tax spending to pre-tax spending, you're automatically saving. Now, when we talk about this concept of, and that sounds great. So let me step back a point. That sounds great. This concept of after-tax spending versus pre-tax spending. That does not mean go and never put anything on your personal card and run everything through the business. That's not what that means. But what we're talking about is, can we find opportunities to move some of that after-tax spending, some of that items that we're going to pay for anyways, we're going to have these expenses anyways. Can we move some of that into a business expense? And so in order for an expense to be considered an allowable expense in the IRS eyes, it's got to be ordinary and necessary. And ordinary just means that's common and accepted in your industry based on the type of work that you're doing, the industry that you're in. If you're a lawyer, if you're a landscaper, it's ordinary in that industry. And the second piece is necessary, which just means it's helpful and appropriate in operating your business. It could be helpful for you to gain clients. It could be helpful for you to retain clients. It could be helpful for you to get employees or retain employees. That's what the IRS says. In order for an expense to be an allowable expense, it's got to be ordinary and necessary in your business. Now, one thing to note is that not all spending is always 100% deductible, but sometimes a portion of some expenses might be. And we're going to talk about some examples, some opportunities, some ways that we can get this moving from after-tax spending into pre-tax spending. So let's dive into that. What are some areas or concepts of this? Number one, the home office deduction. You're going to live in a home no matter what. So whether you're a business owner or not, you're living in a home. But as a business owner, if you have an office in your home, and we talked about this in a previous topic that we talked about, most business owners should have some sort of home office deduction. Even if you have an office elsewhere, you should have some opportunity for a home office deduction in your home. So these are expenses that you're going to have anyways. Those utilities, that rent, that mortgage interest, all of those items you're going to have anyways. But now, as a business owner, you can have a home office in that home, and you can get a portion of those costs deductible as a business expense. So again, costs that you were going to have anyways, now you get a portion of them as a business expense. You're moving a portion of those costs from after-tax spending into pre-tax spending. That's a great opportunity. What about vehicle use? Maybe you have a personal vehicle, and maybe you don't drive much for your business, but you have a personal vehicle that you go to the airport when you go to conferences. Maybe you go get business supplies with that vehicle. There's different things that you do with that vehicle. Well, again, if you're using a personal vehicle for business, you get a reimbursement for that. You get to take the business use of that vehicle. Again, turning after-tax spending, you're going to have that vehicle anyways, but now you're turning after-tax spending into pre-tax spending. Meals is a great opportunity, and we always talk about this. Now, meals are 50% deductible, so just keep that in mind. But there are so many times when you meet with a friend, a family member, that you're just talking business. And to you, it's just a meal with a friend or just a meal with a family member, but you're talking business and you don't even realize it. And I had this conversation the other day where I was with a friend, and we'll talk about that conversation and how I approached that opportunity a little bit later in this presentation. But meals are an incredible way you can take advantage of this opportunity as well. Travel. Me and my wife used to always do this when we would travel. We would look for places that we wanted to travel and then find business reasons to go there. Whether it's visiting a client, visiting a vendor, attending a conference. We always wanted to go to Washington, D.C. So we said, well, when are some conferences in Washington, D.C. going to be there that are related to our profession or related to continuing education? And can we plan that travel that we want to do anyways around a business conference and now turn that into a deductible business trip? Again, be careful. A lot of things you need to do right here, but there's plenty of opportunity there. Cell phone and internet. As a business owner, you're always on the internet and you're always using your cell phone. So cell phone and internet, a portion of that is going to be a business deduction. Think about technology costs. As I look around my office, I have cords, I have cameras, I have lights, I have all these different things. Of course, those are business related items. And so when we think about this pre-tax versus after-tax spending, it's trying to think of when you're swiping these cards, is there some things that make this business related, whether it's fully or partially, can a portion of this be moved from after-tax spending into pre-tax spending? Another one is hiring your kids. This is one that I absolutely love. And I think if you have kids over the age of 7, you should be hiring your kids in some sort of way in your business. Now, it might not be $20,000, $50,000, of course, but your kids should be doing something in your business, because guess what? As a parent, you're supporting your kids and you're using after-tax dollars left and right all the time to pay for these different things that your kids want to do. But if you hire your kids in your business, now you get a business deduction, your kids potentially pay no income taxes, and then they go and pay for that amusement park they want to do with friends, or they go pay for that basketball camp that they want to go to. That is one incredible way to move after-tax spending into pre-tax spending. Other things to think about is education, software, subscriptions. All these different things are opportunities to take advantage of this. Now, next, I'm going to go through a live example of a practice that I do personally a few times a year to help me understand and get that mindset shift to help me be a better business owner and see where the opportunity is to move items from after-tax spending into pre-tax spending. But real quick, if you are a business owner and you are tired of guessing when it comes to taxes, we just released a brand new tax savings starter kit, and it's 100% free. Inside, you're going to get our ultimate list of business deductions. You're going to get real case studies showing how others saved $5,000 to $25,000 or more. And you're also going to get access to a bonus discovery call with our team. Just head over to taxsavingspodcast.com/starter kit. That's taxsavingspodcast.com/starter kit to grab your free copy. All right, now back to maximizing deductions. And I thought for this specific topic, it would be cool to do a live practice of kind of what I do on my end on how I audit my own spending. So what I'm going to do here, I have printed out a credit card statement, a personal credit card statement, and I'm going to go through a practice that I often do. And I ask myself, can this be connected to business? Can this opportunity be something that is business related? So this is a practice that a lot of people, and as you continue to do this, there's going to be less and less things because your initial mindset always is going to be, oh, there's some business use to this. So keep that in mind. But when I look at this, there is a lot of things on the statement that, of course, would not qualify as a business expense. A movie theater, bowling, the zoo. Maybe there is some business expense, but in my case, it wasn't. I looked at those situations, that was going with family. But now I have one here, it's a gas station. Obviously gas, there's business related. There could have been business related there that I need to look at. Did I include that in my reimbursement for automobile? There was a purchase on Amazon for a book that I bought. Amazon account was tied to my personal credit card, automatically was there. Well, that book was business related and that book helped me in my business. So that's something that I need to think about. Okay, I need to change that card or I need to make a reimbursement there. I have a dinner at Buffalo Phil's, and this was with a friend of mine. And that friend, and this is that story I want to tell you. I was having lunch with a friend to catch up with a friend, something that, all of us do. And I didn't think business related at all. We sat down and we sat for an hour and a half talking about his business, talking about my business. At the end, he goes, man, I need to connect you with these three people to talk about tax savings and opportunities with them because they're really, really struggling with this area. That whole meeting with a friend, we talked about his business. We talked about my business. He gave me some ideas to help me out. He said, I need to get you a referral. That whole meeting, although it was with a friend, is definitely business related. And at the time, I didn't think of it that way because I was meeting with a friend. But as I look back here, I said, yeah, we spent an hour and a half talking about business, and he gave me tips and insights into my business. And he has 3 referrals that he's going to send over to me. That's a business meeting. So that's something to be thinking about. Here's Google Storage. I have Google One on here. Here's Google Storage and opportunities there. Definitely like some business related items there. So I need to find out what is the business use, make a reimbursement there. And then we have Amazon. And, that's probably mostly my wife. And so I think that this also could bring up an opportunity where you have the opportunity to check in on some of the spending that maybe a spouse is doing and saying, do we need all these things from Amazon? But anyways, I digress. I have an oil change on here. That's something that I'm going to include in my reimbursement because my business is my vehicle is partially business related. Now it's a lot of personal, but it's got a partial business relation to it as well. So that's opportunity. BP is gas. We went to a Brewer game, Milwaukee Brewer game, and went with a client who happens to also be a family member, but it's a client and someone that we do advertising with. There's definitely an opportunity there, depending on what we talked about at that meeting, to do that. I'm looking here. I got Verizon. There's a Verizon cell phone bill. So obviously a good portion of that's going to be business related. Make sure I'm including that as a reimbursement. Another Amazon purchase, charging cables, things like that. Spectrum, our internet. Of course, that's going to have some business related. Here's a membership for Costco membership. There's a lot of things I buy at Costco that are business related. I don't think of it that way because I also buy food and I also buy all these other things at Costco, but there's a lot of things business related. So of course I'm going to take a portion of that membership cost as a business item. Cleaning lady, utility company, all of those are going to be part of that home office deduction. Lawn care services I'm showing on here. Again, part of the home office deduction. Utility companies, purchase here on Walmart. That was for a TV hanging in the office that I have over here. Here's an apparel company that, now this one I didn't do. So this was an apparel company that I bought, or I was sponsoring getting t-shirts for a soccer team. And I didn't think about this, but I could have easily, instead of just buying t-shirts for a soccer team and let that be a personal expense, I could have easily put a logo on the back of it and made it be a sponsorship for that team. So there could have been a planning opportunity there. This is a practice that I like to do every once in a while. And as you start to notice these different things, you're going to be sitting down at those meetings where you're talking with a friend, talking about business. You're going to be sitting down at those meetings where you're all of a sudden like, wait, it's time to pay. And what did we talk about? We talked about business related items this whole time. So instead of pulling out my personal card, I'm going to pull up my business card. Or maybe you're going into Amazon. You're like, wait. A good portion of these items are business related. So I'm going to separate them out and make sure business card and personal card. You're going to start to see those as you start to have this mindset shift of this after-tax versus pre-tax spending. Now, there's typically a framework that I typically talk members of tax them through. And the first thing is we want rationale. Are we recording it? And is it reasonable? So the rationale is there a business purpose? Of course, if we're going to take a business expense for something, it has to be business related. That is something we cannot play with. But is there a business purpose? And do we have documentation or the intent of use? So if I swipe a card at that dinner that I had with a friend that I paid for personally, but should have been business, do I have documentation that says, okay, I met with this person, and do I have documentation, whether that's notes, whether that's just writing on the receipt, what we talked about, documentation, and then reasonableness. Be reasonable with all these things. If you were sitting across the table from an auditor, and you were telling them about these stories and why this is business related, would they believe it? If I bought 10 TVs for my house and said, yep, those are going in the home office. If I'm sitting across a table from an IRS auditor and I say, yeah, I got 10 TVs in my home office and my home office is 12 feet by 12 feet. What do you think that auditor is going to say? They're going to call me out on that. So make sure that these things are reasonable. If every single meal that you eat out at is a business deduction, does that make sense? Probably not. Not every single meal is a business deduction. So be reasonable with these different items. Now, proof is the biggest thing. How do we prove these items? We want receipts. So on the receipt, write who, what, where, when, why, right directly on that receipt. If you had lunch with Bob, Say I had lunch with Bob. We talked about, these 30 things in our business, and he talked about referral opportunities. Write on the receipts who, what, where, and why, and just a quick description of why there's a business related item there. Why is that business related? Take a picture of it, save it on the file. You're likely never going to need it. But if you do, you have that documentation to say, here is why this is business related. And if you paid for something personally and you are an S Corp or a C Corporation, make sure you have an accountable plan in place to reimburse yourself for the business use of that item. That's one thing to be very clear. Now, one thing I also want to talk about is that if you have something that's 100% business use, of course, run that through the business. This is not what we're talking about. What we're talking about is other opportunities. So if you have something 100% business use, run that through the business. And I like to always tell this story. I had a friend that was starting a photography business. And, they listened to a lot of stuff we talk about and all these cool planning opportunities and different ways that we can talk about it. And they said, Mike, we're doing lunches that we do, those types of things, of course. But I have a camera. Is that deductible? And I have this photo editing software. Can I take a tax deduction for those things? And I said, of course. So they got so caught up into these different planning opportunities and deep mindset shift that they forgot about the obvious ones. Don't make that mistake. If there is obvious business expenses, of course we're taking those. What we're talking about here is how can we go above and beyond that? How can we find those other opportunities, whether it's the home office deduction, whether it is, vehicle use, meals, travel, technology, cell phone and internet, hiring your kids in your business, education, software, subscriptions, whatever it is, we're talking about those above and beyond, of course, your 100% everyday use business expenses. So let's talk about some action items. One, start small. Look at one bank account and see if you can find one transaction that you paid for personally that was actually business related. Pick one expense type category, whether it's meals, whether it's travel, and start thinking about it more strategically. Make it a point that pick one category at a time. If it's meals, make it a point that every time you're swiping a card for meals, think about, was that business related? Of course, it's not going to be 100%, but was there business related items there? Set up a system this week to track and categorize these items better. $50 here, $75 there might not seem like much, but it starts to add up. That $50 and $75 charges can end up to $2,000, $5,000 and more. And it also makes you a more aware business owner. And just remember, $100 with pre-tax spending is worth $100. $100 with pre-tax spending is worth $100. $100 using after-tax dollars is just $65. Let that sink in and show you the opportunity that you have as a business owner. So the truth is that you're already spending the money. So the real question is, are you spending it smart? Pre-tax spending is how the wealthy build wealth faster. Start thinking like the CFO of your life. And if you want to see more examples of this in action, subscribe now. If you found this helpful, don't forget to hit that subscribe button, hit that like button, and share it with a business owner who's sick of paying too much in tax. And if you want help from our team of tax professionals implementing strategies just like this, along with so many other strategies, visit www.taxelm, that's TAXELM.com, or click the link in the description for a free discovery call. We are helping people like you legally lower your tax bill every single day. Thanks for coming up, and I'll see you on the next one.